Talk Taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk about taxes so that you don't pay as much, or if you're getting billed, that you don't pay the bill that you got, and not without us double checking it. We want to be your advocate. So 803-0930, 803-0930, star 930 on a cell phone, and I'm joined in studio with my compadres, Tiffany Fabian. Hey, Tiff.
Hey there, Esther.
And Christopher Fabian.
Hello.
Hello, Christopher. All right, so we want to talk about things to plan before year end, and we want to talk about tax school first. So why don't we give everybody, because school is coming up.
It is.
I saw all these. I was shopping today, and I saw all these. Everybody's in the school mood for school. I was over at the Christmas tree shop, and there was all these kids buying stuff for, you could see, for their dorm and stuff. Yeah.
Oh God, that's always happy, sad for me.
But
I don't know.
So we have our tax school starting, and we actually have basic, advanced, enrolled agents, and that's it.
That's it.
Right.
Yep.
So 3 different schools that you can sign up for, and it's a tuition school, free school. So we don't charge you anything to teach you. The only thing you have to buy is the materials.
And we also have the annual federal tax refresher course, which is an online conglomerate, and you would become an AFTR with the IRS. So that's also exciting. But yep, we have 5
AFTR.
annual federal tax refresher course.
Okay.
Yes. And 5 locations for our tax school, which is basic taxes from A to Z. The locations are Amherst, West Seneca, Lockport, Warsaw this year, and Grand Island. And it's an in-class setting. It's either in the morning or the evening, twice a week. It's very reasonable, and the only thing you're paying for is the book. And we also have an online opportunity, too. It's in the basic class, but it's all the same stuff
and
online.
what's really cool, online, if you started online, what we always suggest is that you stop in every 3 or 4 weeks and be in class with the teacher so that they can help you with any questions. There's nothing like being in class, because the teachers do all kinds of anecdotal things, right?
Right.
Like, I remember one time when
you taught a class.
Oh yeah, but they tell all the stories, which makes it so
it
fun.
makes it comes to life. I know sometimes I'll sit down in the middle of my class and I'll pull up a chair and I'll just shoot out stories without names.
Yeah.
And people are so in tune, the students, when you put it into real people.
Here's an anecdotal thing. The other day I was in the office, and I have this lovely lady that came in, and she had a bill from the Internal Revenue Service, and for $12,000 some odd dollars, because she had a debt cancellation from a student loan. But effectively, she was what, Chris?
Insolvent.
That's exactly right. So I was able to do a form which made the debt cancellation, which would have been taxable, not taxable. And so, and then she got another bill on the another tax year, and she had done a little self-employment thing, and she didn't take any of the expenses. Anyway, I saved her $13,500 real dollars.
Yeah,
that day. I mean, that's a lot of money.
That's exciting.
And that makes me. I love to save people money. I'm telling you, I absolutely love it. 803-0930, 803-0930, star 930 on a cell phone. So if you want to come to school, they can register on our website, right?
We had a registrant yesterday. I know people are registering already, and classes fill up, so make sure you get in.
Right. And then we also have a discount if you register early.
You pay by September 15th. There's a nice little discount that, you love saving money. Like you said, you want to save people money, and that's one way we're doing it. Prepay, get yourself registered, and, you'll be in, and then what a great opportunity. You can even make money off of it, too.
That's exactly right.
Yeah, and then also Esther always says, which is a good point, you can write it off. It's tax deductible on your tax return.
And not to mention how I think people's eyes are opened when they see all of the laws, which you think you know, but you really don't know. And you say, oh, my gosh, I had no idea. I had no idea that people get money back from the Internal Revenue when they didn't pay anything in. Hello. There are all kinds of refundable credits. And then you'll watch the political debates, and you'll say, well, they're wrong. Those politicians don't know tax law. Hello.
Scary.
Right.
They should.
All right. 8030930, 8030930, star 930 on a cell phone. I saw a program this morning. By the way, I went to Saratoga yesterday. I went to the Saratoga.
Did your horse win?
My horse naturally won. No, my horse did not naturally win.
Oh.
But we were having fun. But
You don't own a horse.
And
you were just
no. I went
With
with
your
our
daughter.
daughter.
Yes.
Asked us to go, and so we went, and we had a wonderful time. And I wore a great big hat, which was so fun, and she wore a hat, and that was the funnest part, was wearing the hats.
I looked at the picture and I was like, "Where's Esther?" Because you have this big hat on. And
right?
Where's
but
Waldo?
we just had a really great time. But you can't see when you're wearing those giant hats, ginormous hats. You cannot see because your eyes are. But anyway, but we had a great time.
So you don't know if your horse won then, really?
My horse is lost. My horse is lost. I'm not much of a gambler, but I was doing things like, oh, that's a pretty one. I was doing exactly like so girly
I thought you
stuff.
said your brother was going to tell you.
He did. He gave me 3. The first one we got there late, it won. The other 2 lost.
But
and so the
one
last
isn't
race,
bad.
I actually did win. And I did it by like, oh, I like that name.
So that was better than.
Yeah.
Right.
Anyway, all right. We're gonna go to we're gonna talk about and I was talking about this morning. I was watching a money program, which I love to watch, and I wanted to talk about this before I get to the phone calls. One of the things people should do that have a 401k plan or some kind of a employer-sponsored matching program, you only have now September, October, November, and December to make sure that you have the maximum amount of money in your plan so that you're going to get the maximum match. So let's say you make $40,000 and your employer says, I'll do a 4% match. Then you need to put in how much? $1,600, right?
Right.
To get the maximum $1,600 from your employer. This morning on this program I was watching, it was saying that like 80% of people don't ever put in the minimum amount to get matched. And so they leave all that money on the table. So make sure you're not somebody like that.
Right.
Right? It's tax-free money, except when you take it out, right? And then the other thing is, another thing they said was like 30% of people never redeem their points on their charge cards.
It's so funny. I just got a statement in the mail, and I wrote down right here, redeem my credit card points. I just got something from Bank of America, and it said I had $170. So if I don't redeem it, I lose it for the year?
Well, some accounts will lose it if you
Right.
don't do it. So you want to make sure. I know every right after tax season every year I take out all my charge cards
Right.
that I was accumulating points, and if I'm not going to use it for travel, like some of these are travel ones,
Yeah.
I turn it into cash.
That's cool.
But we always talk about saving people money. You got to be careful though with these points that you earn, because sometimes you get this great offer in the mail. You get to earn 3%, 2%, 1% back, but they're charging you 24% interest.
Right.
So if you don't pay off your credit card,
Right.
you're paying more than what you're getting.
Right,
back.
but you don't. But when you charge, if you do pay off your charge card and you're accumulating points, you
Right.
want to make sure, right?
And the one I'm talking about is 0% interest until February. So
Right.
I got to pay it off before February.
Right. But the whole thing is, if you have points and you don't feel like you just take out your charge card, look at the number at the back, and call them and say, how many points do I have? And then if you aren't going to utilize those points, they'll turn it into cash in most situations. They'll turn it into. Sometimes they won't. There are some that won't, and you have to use it for travel. And then make sure you do use it for travel.
Yeah. But
Okay.
don't leave money on the table.
That's right. I'm Esther Galias, the tax lady. 8030930, 8030930, star 930 on a cell phone. When we get back, we're going to talk to you who have called in, and then we're going to talk about things to plan ahead before January. See you on the other side.
That's
I know
Jackson
that's a
5.
Jackson 5. See, if Tyler goes back far enough, like for 30 years, I'll get
Michael.
it right.
You know,
I'm Esther Galias.
he almost sounds like Adam Levine.
Who? Oh, that's true. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone from EG Tax, and Sandy has been waiting so patiently. Hi, Sandy. How can we help you?
Hi, Esther.
What's new?
I actually have two questions. The
Yeah.
first regards a UTMA account for grandchildren. If they don't use that UTMA for college, and they've continued on now into the job market, there's some funds left over, is it mandatory that we cash this out at a certain age? Can we let it ride? Is it better to let it ride, or is it better to take it out while their earnings are lower for tax benefit? I just don't know.
Well, if it's just an UGMA, which is a Unified Gift for Minors, UGMA, then it's not
UTMA.
All right, so the UTMA is just another form of UGMA account, is it not? What's the T stand for?
Trust.
Okay, so it's just the kid's money.
Yes.
And what were you
It's
going to
in
say
their
about it?
Social Security numbers.
Right.
Right, that's just a stock account. That's
Right.
not a tuition
Right.
account. So that can stay in there till they're 80 if they want.
I mean, it's their money. The whole thing is that trust account, the Unified, it's usually Unified Gift to Minors Act, means that you gave money to a minor child, and it's going to have to be reported on their tax return, and they're subject to kiddie tax. But it's their money; they can do what they want. Now, had you put it in a 529 plan, where you would have taken a deduction on New York State, then it would be a horse of a different color. Because then you'd taken the deduction, it would be income on the state, and all the income that had appreciated over the years would be taxable. But in this case, it was just a savings account. You put it in there, it belongs to the grandkids, and it's their money.
And as long as it stays there without any activity, then they don't pay tax on it, correct?
They pay tax every year
On the dividends
on the
and
dividends
capital
and
gains.
interest. Right.
Well, I guess because they're too young, that's why they haven't had to this point.
Well, it's actually not age; it's the volume, it's
Of
the
earnings.
income that the accounts generate. So the figure is
$900 if they have no
$800,
earned
yeah.
income.
Yeah, so if they have unearned income from these accounts over $900, then they're going to pay taxes at
And-
the parent's rate.
Well, that's if it's over $1,900, they pay the kiddie tax.
Right.
If it's between 900
They
and
have to
19,
file.
they have
right,
to
they
file.
have to file. Right.
Okay, but like the stocks, they'll go up, they'll go down. We see
Okay,
them go
but
down
like
hard
for
today.
instance, if there was any trades in their account, that could trigger them to have to file a tax return too. In other words, let's say that it's in the stock account and the broker sells $20,000 worth of stock, and they paid $18,000 for it. There's a $2,000 gain, and so you have to file a tax return, and they may end up paying taxes on that.
And like Sandy, Chris and I have an account at Ing, and every year the account at Ing earns some dividends, and so every year we have to put those dividends on the return, but only if the kids earn dividends of more than $900 in
Up to
capital
19.
gains.
Right.
Gotcha.
Yeah.
Okay.
And my second question is this. I love to listen to your program. You come up every week with something new, a new way to save on tax money that I haven't thought of before.
Well, thank you.
And my question is it possible to get a review of my taxes through
Absolutely. Anytime you want, just call the office, 632-7886. And as a matter of fact, I was with my clients the other day, and so he takes out his checkbook, and he said, "What do I owe you?" And I said, "Nothing." And he says, "What do you mean nothing?" I said, "I don't charge."
To review.
To review a tax return, it's no charge. So we sit down, we have a cup of coffee. I bore you with all my personal stories.
Your antidotes.
My antidotes.
That's fine.
And we just have a great time together. So anytime you want,
Yeah.
just give us a call.
And it's
Sandy.
really important. The statute of limitations is 3 years, so you have 3 years to fix your return if anything's wrong with it. And so it's really important to I know Chris has a client, and every 3 years he just comes in, and I think he does it himself, and he has us review it and to see if he did everything correct and things like that.
And
So-
the other thing is, Sandy, what I'll do is let's say that you did it mathematically correct, but if you did this thing for planning, you'll save this much money, and I'll make little suggestions,
That's
as I
exactly
look
what I'm looking for, yeah.
as I review your return. So call.
Yep.
Be thrilled to meet you.
Wonderful. Thanks
Thanks,
so
Sandy.
much.
Bye-bye.
Bye-bye.
One other thing, if the money was sitting in a 529 plan and say the child became 28 and there was still money left in there, they could transfer before they're age 30 to their own children.
That's correct.
So then the tax still gets deferred until that grandchild or their child now goes to school.
You're saying
So
the
549.
child who owned it that didn't use it could go to the next project.
the next
right?
generation.
Right.
Yes.
And then another thing with Sandy, she could also drop off a copy of the return, or she could email it to you.
But it's
too.
so much funner to be
That's
with
true because
people.
of the anecdotes.
Yeah, because I kind of do my own little dog and pony show. It's a lot of fun. All right, we're going to go to Mr. Bill in Wilson. Hey, Bill, how can we help you? Hello, Bill.
Hello,
Hi, you're in Lewiston.
I'm in Lewiston. You said
Yeah,
Wilson.
I did. You're right. They're right down the street from each other, right?
Okay, yeah.
What can I help you with?
Esther, we've been getting phone calls from all different parts of the United States saying that the IRS is going to sue us and stuff like that if we don't get contact them right away at these numbers.
Not true.
Which I would never call them
Attaboy.
anyway because I've been listening to your show and I know.
But it is scary, isn't it?
It will never call you. You always get a letter.
Right.
Stuff like that.
Right, but it is scary, isn't it?
Yes, it is.
I mean,
You know,
because
when
it
you,
sounds so official.
Pardon?
It sounds
Yes, it
so
does.
official.
Exactly, and you've been doing my taxes for the last 12
I know
years
who
and
this
stuff.
is. I can see your face in my mind. Yeah, but don't call. I mean, if you want to call the FBI to
Report them.
give them the phone number, you can call the FBI and do that with them. I tell you to call the IRS, but they aren't answering the phone lately. So that's what I'd suggest you do, Bill. But don't worry, you're fine.
Yeah, okay.
If they pick you up, you and your wife up, just call me and we'll all go down together. All right?
No, but last night we got a phone call after 11 o'clock.
Wow.
Yeah,
It
because
was in a state that my daughter lives in, and in the place
difference.
that the city or whatever it is was very close to her, so we got scared. When you get a call from after 11 o'clock.
Right.
you thought
like
maybe
that.
something was wrong with your daughter.
Believe me, the IRS is very efficient, but if they were if you had a bill, I don't know of any situation that they call after hours. Do you,
No.
Chris?
No, never.
Yeah.
I mean, I know, as a matter of fact, the other morning, me and my wife were ready to go to work, and it was still before 8, and my cell phone rang, and I'm going, who's calling me now at this time in the morning? And it was from California, which meant it was like 4:30 in the morning, and it was, hello, this is Agent Johnson of the Internal Revenue Service. Please give us... And I'm like, okay, first of all, it's California. They're not up yet. So you knew right away it was fraud.
Right.
Yeah.
Right, yeah. Well,
and this
anyway,
is
I
their
figured
job.
I'd give you a
these
call.
Well, I'm glad you did, Bill, and they're not going to be
I've been
picking.
listening to your show, and
Yeah, they're not going to
hopefully
be
they don't-
picking you up. But thanks for calling, because I'm sure there's a lot of people that are getting those calls and don't know that it's all a scam. So thanks for calling.
What I was going to ask you, the tip of, could we stop this from happening?
You see, the thing is, they
I
must.
don't mind getting called during the day and say, okay, that's crap.
You can't even block it.
You
can
know,
you,
when
Chris?
you're getting called
No.
after 11 o'clock at night.
I
They
know.
keep changing their numbers, so
Right.
there's nothing even the FBI can do.
Yeah,
And they're in a different
know.
country.
Yeah.
They can't track it, yeah.
yeah. It must be successful because they keep this thing up and they're changing their stripes. In other words, one week they're doing one thing, one week they're
Chameleon.
doing the other. Yeah.
Yeah.
Well, I'm glad you're smart, though. Thank you, Mr. Bill. Have a good day.
You too, Esther.
Thank you, sir. Bye-bye. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on cell phone from EG Tax. If you have any questions, comments, tax issues, give us a call. Love to hear from you. Let's see, we're going to go to Paul in West Seneca. Hello, Mr. Paul. How can we help you, sir?
Hello, Esther. Got a question for you.
Yep.
I'm trying to find a way to estimate my New York State income tax
Okay.
amount.
Okay.
I retired the end of last year, and I don't think I'm having enough withheld.
Okay, let me ask you a couple questions. How much is your pension?
And is it a New York or federal pension?
I have two pensions, one of them from New York and
Okay.
one of them from a private
All
employer.
right, give me the New York pension first.
$6,500
All right, for the year, right?
for the year.
And give me the private pension.
$23,000.
All right, and how old are you?
68.
And any other source of income
Are you
besides
married?
that?
I didn't hear the other part of the question.
Are you married?
Married, yes, and we both get Social Security.
And collectively, your Social Security is about how much?
41,000.
Did you say 81,000?
41?
41. Okay. All right. Any other source of income besides this?
Your
Paul?
wife?
Is she working? Your wife working?
No, neither of us are working. That's
All right.
all the income we have.
All right. So here's the deal. The pension that you're getting, that's $23,000 in your name or in your name and your wife's name. Is any part of it her pension?
No, it's all mine.
All right. So Chris, you want to give them the happy news?
Well, for New York State, there is no tax.
No tax liability.
So
Really?
you don't owe New York nothing. So don't have any
Don't have
withholding
withholding.
because
The $6,500 is completely tax-free because it's a New York State pension. The $23,000 pension, 20 of it's tax-free, so all you're going to have sitting out there is 3. All of your Social Security is completely tax-free on New York State, and after you take off your standard deduction for being married, you're going to owe nothing.
And I'm sure you're over the age of 59 and a half,
Yeah,
right,
yeah,
Paul?
68.
Yeah.
Yes.
So happy days.
Well, thank you very much.
You're very welcome, sir. Have a good
Bye-bye.
day. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. News at 3:31. Okay. So,
And actually, let's see, for federal, for married filing joint, that's 14, 50, 60, 70, 18, 19. He's not so far away from federal.
not-
Well,
either.
yeah, but he's looking at about 50% of his Social Security being taxable. So he's
Yeah.
at about
Yeah.
$45,000 worth of income. So he'll be
Right.
down to 25.
so
his-
about $2,500 liability,
Yeah. Right.
$200 a month.
Yep,
So
yep,
that's
yep.
that's pretty cool.
That's pretty cool.
That's pretty cool. 803-0930, 803-0930, star 930 on a cell phone. If you are getting love letters, phone calls from the IRS, letters from New York State, haven't gotten your refund, don't know what to do, this is your place for free help. EG Tax would love to help you. On the other side of the news, we're going to come back and talk about things that you need to do to plan ahead. We're going to talk about charities, capital assets, how different kind of income is taxed, and so that you can make plans as to how to handle all those tax situations. And we'll see you on the other side. 803-0930, 803-0930, star 930 on cell phone. I'm Esther Gullius. Revolution. I know this one. The Beatles, right? A revolution. Right?
Very good, Esther.
All right. He has to go. Poor Tyler. He loves the rolling oranges
gotta
and
play
the banana peels, and I never heard of them people.
The
But
sideways
anyway,
staircases.
The sideways. Is there some place called the?
No, but there should be.
There should be. That's Tyler Samer. He's our producer, and he's a wonderful guy. 803-0930, 803-0930, star 930 on a cell phone. And
He had a before you after you go to the call. He had a good question about credit cards. If you want to talk about.
Well,
it.
I mean, he was talking about using credit cards to your best advantage. If you got a 0% or a very low percent credit card, you could actually, if you are in control of your finances, use the equity to pay off other bills and build points up.
and get points and gather
Right.
points.
But like I said to him, you
key.
really cannot let it get out of control.
Yeah,
Right?
Discipline.
Okay, and we're going to go to Sue in West Seneca. Hi, Sue.
Hi.
How you doing?
Good, thank you. I am going to be turning 70 and a half this year.
Big
I
year.
have pardon me?
Big year.
Yeah. I have my own IRA,
Okay.
and I inherited one.
Okay.
Now, the one that I inherited continues to come in the estate of, and then they have me mentioned as a beneficiary.
Mm-hmm.
I have been taking $4,000 out of that each year, and I didn't know because it comes in the estate of, if it counts for me taking money out at 70 and a half.
Okay. So the first thing is, are you annuitizing it? How did they set it up when you?
It stayed as is, as an IRA.
Was it your husband's?
No, it was a family member.
No, I mean, when you took it, did you take it over a 5-year period? Did you annuitize it based?
I took it over a 5-year period.
Okay.
It was worth $20,000.
Okay.
And I have been taking $4,000 out because I wanted to liquidate it so my children would not have to go through what I went through trying to settle the estate.
So first things first, let's deal with what you were talking about, the RMD, the required minimum distribution. When you turn 70 and a half on this first inherited IRA, you are taking way over the required minimum distribution. So there's no problem there.
Okay.
The other IRA is going to be based upon your life expectancy, which is what, 27.3, Chris?
The first year is 27.4.
27.4. So basically you're going to take the fair market value on December 31st in the year you turn 70 and a half, divide that by 27.4, and the answer is the amount that you must take out that year. The next year, you go back and look at the actuarial tables, and they'll say how many years they anticipate you're supposed to live, and it'll be like 26.8. That right, 26.8. You're going to divide that by your fair market value next year, and you're going to take the 26.8 divisor out the next year, and so on and so forth. At any time, you can take more out, just like you're doing on your inherited IRA, and so you'll more than exceed your RMD.
But the beneficial IRA distribution does not count for the regular IRA.
Yeah,
Correct.
that's what I was questioning.
Right, correct.
Okay. All right. Well, thank you so very much.
All right, thanks, Sue.
You have a great day.
Thank you, you too. I'm Esther Gullius, the tax lady, with Christopher Fabian, who you can hear in the background, and Tiffany Fabian. And if you have any questions, 8030930, 8030930, star 930 on your cell phone. And by the way, if she didn't take out her required minimum distribution, there's a big problem, right?
Yeah, there's a 50% penalty for the amount that she should have taken out.
That you failed to take out.
It's a 50% penalty, so it's good that you stay on top of it, and good that she's asking
So
the
if
questions.
you were supposed to take out $10,000 and you take nothing out, they're going to penalize you $5,000.
Correct.
It's not like they're going to put $5,000 on your tax return. They're going to make you pay.
Right.
$5,000.
It's not. Yeah. They're not going to. Oh, you better take that $5,000 out now. It's a $5,000 liability.
Okay, so let's talk about things people can do to get ready for the end of the year. I have on here charity, and cleaning out your closets. Here you got. I was talking to our son yesterday. He's gonna go clothing shopping for his daughter, and so you're bringing stuff in. What a great time to do purging, right?
Get rid of the old.
So what do you have to do if you're giving non-cash contributions away to make sure that you can prove?
Make a list.
Check it twice.
Yes. Find out who's naughty or nice.
Take pictures.
Take pictures of it. If you lay it out on your bag. I almost said on your bed. Take a picture of it. Put it in one bag. Then do the next load. Same thing. Lay it out. Take a picture. Make your list. Put it in the bag. And
make sure you don't just drop it off at the drop box.
Yes. Get
Right.
the receipt.
Right.
And another helpful thing, if you go to salvationarmy.com or goodwill.com, there's a list, and it tells you if the item is in excellent condition, what the value might be, if it's in fair, if it's in good. And so that list is a godsend. So
right.
go.
So if you go to salvationarmy.org, I think, .org,
Right.
and you download the list, and then it tells you what a blouse would be worth, what a TV would be worth in working condition, because if you give a TV that doesn't work, that's not then you don't get anything for it. I mean, so you make that list, and then you attach the list with all of your proof, and then if you ever get audited, here's your proof.
And something really important is you don't want to bring it to one of those drop-off sites without anybody there. You want to go to a facility that has a live person so they can sign the document that you dropped it off on X date.
And the thing is, all right, so let's say that you give $2,000 worth of non-cash items, and you're in the 15% bracket. It saves you $300, right?
That's pretty good.
So it's a really great thing. Clean out your garage while it's still nice out.
Right. And also with cars, we'll get a lot of calls probably starting in October. I want to donate my car. I want to get that tax write-off. It's not what you think the car is worth. What is your donation? It's what the charity gets for it in auction.
When they sell it.
Sell it in auction. And it's when they sell it in auction, you get to take the write-off.
Or use it.
If they use it, they have to appraise it, give you an appraisal. But if they are selling it in auction and you donate it in December of 2015 and it doesn't sell to January of 2017, your write-off isn't until 17.
Unless the charity starts using the vehicle themselves. Correct?
Right. Yep.
And in that case, then they still give you the appraisal of what the vehicle is worth, correct?
Correct. Yep.
Now the other thing is that people don't know about charities is that and the income and deductions that we're going to talk about here is it's all multiplied by your tax bracket. So if you're giving a $10,000 car, and let's say the charity says, wow, this is a humdinger, I'm going to keep it and use it ourselves, and they say that van is worth $10,000, then you get a $10,000 write-off, correct?
Correct.
With the appraisal, right? And if you're in the 10% tax bracket, what do you really save in taxes?
$1,000.
$1,000. So you would be better off. I'll tell people now, it's a wonderful thing to give to charity. I am a firm believer in being generous. But if you're doing it for the tax write-off, you just, in effect, sold the vehicle for $1,000.
Correct.
Right?
It would be much better to
get the cash.
Put a ad in the paper and get the cash.
All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back with more of the show and your phone calls after the break.
There's a sideways staircase.
Is that sideways staircase?
It's the Stones.
That's the Stones? What song?
Give it a second.
All right, I got to shut my mouth. I'm listening. Oh, yes. I had a great time at the Stones concert.
Oh, what a show!
It was great.
Did you hear though the stage crew that was
They
hired?
They didn't get paid, right?
Yeah, their checks bounced.
Wow,
that were directly paid from the Stones.
Isn't that unbelievable? Well, anyway, I'm Esther Golias.
They needed the money for oxygen.
Right. Well, they need some tax planning, that's for sure. 8030930, 8030930, star 930 on a cell phone, and we're going to go to Jim in Ransomville. Hey, Mr. Jim, how can we help you?
Hey, good. I got two questions. One is a real quick one. I've been paying federal income tax. I was a federal employee.
Okay.
And so I guess I'm in the 15% tax bracket.
Okay.
And they're withholding 5%.
Okay, then
every year I'm writing them a check for like $3,000.
Yep.
So what number would I call to have that raised?
Well, you should call the government, who your payor is, and change and do a W-4P. You can actually call our office on Monday. We'll do the W-4P for you and send it to your house, and then you just send it in to them, and they should change it based upon the change in the W-4P.
Yeah, you just find out who your pension holder is and where you would mail the new withholding form to.
Okay.
Then the second question I have is, when I was working over the years, I set up IRAs, and I have some Roths, both.
Okay.
And so I have, let's say, an IRA and a Roth at Fidelity. I have one at Vanguard. I have some at American Century, et cetera. So now I'm 71. Do I have to take a portion out of each one of them, or just total?
Nope, it's the grand total. So you want
not on a Roth.
Not on a Roth.
Not on a
That's
Roth.
right. Yep, I'm thinking regular IRAs.
A Roth is different rules. On a Roth, you never have to take it out.
Okay.
Okay, it goes into your estate, but it's not ever going to be an item that has to be taxed.
And then, Jim, I also wanted to say, for you're short every year on your withholdings. You could also take the withholdings from your Social Security. You could fill out a W-4V and have the withholdings come out of your Social Security too.
If that might be easier for you, right?
I get like $300 a month.
But your Roth is good to go. You can use it just like a bank account.
All right, but let's say, for instance, I just took out $3,000 to pave the driveway.
Right.
Does that out of my Roth? Does that suffice for my withholding? Or do I have to still take it out?
No, it's tax free. So you took it out. It was in for at least 5 years, right?
Oh yeah.
Okay.
Yeah.
So all the money grows completely tax free, and when you take it out, you're going to get a 1099-R, just like your other pension. But when you put that on, it's going to have a Q code, which means it's out of a Roth. So it won't. So you have to make sure that you show that you got it, but it's not going to be taxable.
Okay, but that $3,000 withdrawal this year will suffice for the.
No, that will not alleviate it.
It will not. Okay.
No. But it's there is no mandatory required minimum distribution.
But he has traditional IRAs.
Oh,
too.
You also have traditional, Jim?
Yeah, I have both of them.
Yeah, the traditional ones, you got to take it out. In the year you turn 70 and a half, which would have been this year, you can wait until next year and double dip as long as you take it out before April the 1st, the first payment, and December 31st, the second payment.
And you can take your community. Oh my God!
Like Tiffy was saying.
Yeah, your total distribution that you're supposed to take out of one of your traditional IRAs.
Right.
So the lower earning one, you could take it all out of there instead of taking out of the high earning.
But not out of your Roth.
But not out of the Roth.
Okay?
Okay. Fantastic.
Thank you, sir.
Hey, one other quick thing. How do I get on that IRS list when they call? Because I would like to fool with them when they call me.
Well, if they ever call, that's what I was going to say earlier. Just if you can keep them on the phone, that's one less or two less people they have to call.
That's true. But mostly what they do is if they can't get a hold of you, they'll just put it on your answering machine,
And
but
give you a
I
number
know,
to call back.
A lot of these people that call us at the office, because we seem to get Google Maps, drives me crazy. So I wait till I press 1 and I talk to somebody and I say, now, they say, do you want your listing? And I say, no, you ruined my day. I thought I'd ruin yours. Click.
Yeah.
Yep. Thanks, Jim.
Thanks, Esther. Yep. Bye-bye.
Bye-bye. Okay, we're going to go to Jim in Buffalo. Hey, Jim, how can we help you?
Yeah, about 3 years ago, I got into the company stock plan, and it's options. And then, they freeze the price when you initially buy it,
Right.
and then 3 years later. Okay, what they ended up doing is I took the options, hey, sell the options, put the money in. They said, okay, we'll process it through your payroll. No fees, it's a good thing. What they ended up doing is the gain portion of it, they sent it through as regular
Wages.
W-2 wages.
Right.
Okay. I thought the gain on an options would be subject to capital gains. That's all.
Okay. So here's the thing. When you sold it at a gain and it went into your W-2, what happens now when you sell it, you then get that's your stepped up basis. So let's say that you did an option let's say you sell it, when you finally sell it at $10,000, your cost basis would be whatever you paid for it plus the taxable portion. So when you report it on the Schedule D, you have a higher cost basis and as a result, a lower tax liability. And that's what people, do you ever see that, Chris, where people do that wrong and forget to step it up?
Yep. Oh, definitely. And it cost you almost pay double the tax.
Right. So they put it in your W-2, which means that when you sell the stock, that gain is already in there and it increases the cost basis. So it is reported on a Schedule D and on your W-2. So you want to make sure that many times it's a wash.
Here's the caveat to it. They withheld Social Security and,
Right. So it added to your Social Security.
Right.
Oh, even though it's a gain?
Even though it's a gain, because it's considered part of your wage package.
Oh, my God. By the time they take out everything, there's nothing left of the gain.
But I think what Esther's saying is sometimes people will have it bulked up in their wages, and then they'll also put it on a Schedule D
and not increase the cost basis.
So make sure
and they
you're
end up
diligent.
paying twice. So make sure that you include it on when you do sell the stock. when you finally do sell your stock, make sure you increase the basis for the gain that they put on your W-2.
When you're filling out the Schedule D.
Okay, thank you.
All right, thanks, Jen.
Boy, makes your head spin.
Yeah, it does. All right, we want to talk about some things and the different taxability of stuff. But in the meantime, if ever you guys have a question, if something comes up during the week and you just don't know, you can email us through our website at egtax.com. You can call us.
I just want to say, sorry, for those people, how do I know if it's grossed up in my W-2? In box 12, it will say code V. V is in victory. So if you have a V, that would then be added to your cost basis on your Schedule D.
And if in the last 3 years you've had this happen and you didn't gross it up on your Schedule D, call us, we'll fix it.
Or if you have a code V on your W-2 and you didn't do a Schedule D, you may be getting a letter from the IRS.
Right. And that would be a letter and not a phone call. Okay, I wanted to talk about how different things are taxed differently. Wages are taxed as ordinary income, right?
Correct.
Tip income as ordinary income, but if it wasn't reported to your employer, what else do you have to report?
Medicare.
You have to do the FICA.
The 4137, right. So you pay your Social Security and Medicare tax on it.
Capital gains are taxed as long-term assets, right? And if you're in the 15% bracket or lower, you pay 0 taxes on it. Short-term gains, though, in other words, stuff that you've had for less than a year or less, is taxed as ordinary income, right?
Just like wages.
Social Security may or may not be taxable, correct? So Social Security can be as much as 85% taxable, or not taxable at all, depending upon whether half of your Social Security added to your taxable income exceeds $32,000 and you're married joint, or $25,000 and you're single.
Right, and that can really get people when they're retired. And so you got to really pay attention to that Social Security.
That's right, and you can end up making yourself pay taxes if you aren't careful on your Social Security on how you're withdrawing money, especially on your RMDs and things of that nature. And so if this is in your ballpark, if this is what's happening, call us, we'll help you. VA benefits are largely tax-free, almost always tax-free. Welfare, tax-free, right? Pensions, subject to, are just like wages, subject to ordinary income, unless you're a New York State retiree and you're over the age of 59 and a half, then the first $20,000 of your pension is tax-free on the state. And if you're a federal, state, or local retiree, then how much is tax-free on the state?
And it's all tax-free. Yep.
Right?
Yep.
Sale of depreciable assets. If you took straight-line depreciation, it's going to be taxed all as, and it's held for more than a year, it's going to be taxed as a capital asset and may only be subject to anywhere from 0 to 15%, 25% if you're upper income.
You skipped
20%.
Self-employment.
Oh, self-employment. If you're self-employed, after your expenses, ordinary income plus
a self-employment tax, 15.3% of 92.45%.
You number guy.
Right. And then rental property that we talked about is going to be taxed probably as a capital asset if you have straight line depreciation. However, vehicles and machinery and equipment used in business, when you go to sell it, you want to make sure you trade it in, right? Why, Chris?
Because then you reduce the basis of the new property and you pay no tax.
Right, but if you take let's say you got you're a landscaper and you're selling your truck outright and you paid $30,000 for the truck, and now you're selling it for $10,000 and it's fully depreciated, and you sell it out in front of your business for $10,000, then you have to pay taxes as ordinary income. But if you took that truck, traded it in on another $40,000 truck, you don't pay anything. Very important that you use it as a trade-in. Annuities are taxed as ordinary income, right?
Right.
Yep.
Unless you have a basis.
Right. Then it would be the gain.
Right. Inherited assets, if it's stocks, then you get a stepped up basis if you inherited it, right?
Correct.
But if it was gifted to you, then it goes back to the donor's basis, right?
That's right.
So how you sell, what you sell will affect your tax liability, and that's part of what you want to do is you want to plan before you sell the asset, because during tax time we end up beating you up when you could have done it another way, right?
Yep.
And so if you need help during the week, if you're thinking about going to tax school, we would love to have you. You can give us a call at EG Tax. You can visit us on our website at egtax.com. Call us at 632-7886. Or email us through our website. We'll be very happy to help you. And until next week, I'm Esther Gulius with Tiffany Fabian, Christopher Fabian, and our guys here in the control room where we couldn't do it without them. I'll see you next week.